Thank you very much for your eagerness to learn, and thank you very much for always being part of our sessions. My name is Darius Sinkwasiwe. I am always your host, and I'm very delighted to host you again. Today we are going to be talking about an interesting topic, which I've found that many people love and still many people don't know about. I would like to ask for those of us that are on the call, please take some time and type something in the chat and let me know what you know about unit trust investments. Please type in the chat and share what you know about unit trust investments. I'll be reading from the chat the messages that you share. So please bring them on before we can officially start. What do you know about them? Herbert Katongole says they are tax-free. Thank you, Herbert. Sheila Wamara says they are relatively safe investments. Thank you, Sheila. Timothy Chinji says they are fund managers who invest on behalf of their clients. Are fantastic. Please bring on more thoughts of what you know about unit trust investment. Be waiting to hear from you. In the meantime, you can also go on and invest and invite your friends who may not be here. So Kambona Williams says collective investments where interest is compounded. Fantastic. Timothy Chinj also says Forex, bonds, treasury bills, depending on your level of risk aversion. Atuhamize Yoram says it is one way of investment apart from life insurance, though for those who have residual income. And Grace says they help in savings and reinvest in other ventures that are long or short term. Interesting ideas coming on from the different of us. Yes, these first minutes, I would like to assess what most of you know before the guest speaker can take on the floor. Okay. Jotham says, form of investment where return is, just a moment. Form of investment where a return is offered to cash deposit based on market performance. A great one. So Herbert Katongole says they are easily covered without having to lose interest. They are a good way to keep on keeping money as you plan on long-term investments. Okay, so we'll be starting shortly. Just give me a minute as you keep sharing your sessions as they come through. All right, so right about now, I would like just one more thought. Okay, I think it was the same that came through. So I'm going to invite our speaker for.
Hi, Darius. Kindly make me.
Today, as you've always known, this go along. Yeah, sure, Sharon, you should now be able to share your screen.
Hi, Darius. Am I audible enough? Are you able to hear me?
Yes.
So I have two devices and I want you to enable the one that has Sharon presentation. I don't know which one you've made, but the one that has presentation should be the one enabled to share screen.
All right. All right. All right, just a moment. I will. All right, Sharon, you now have the rights to be able to share your screen.
Yeah. Okay, thank you so much. Let me just do that right now. Good evening, everyone who has joined us on this call. My name is Sharon Tumshave. I work with Zeno as the sales manager. For those that may want to know how I look like, let me just try to enable my video for just a few minutes. Hi, this is me here. Darius, would you want us to get started immediately, or how would you want us to run the session? Maybe I'll just recommend that the questions can be typed in the chat room so that when I'm done with the presentation, I can easily come back to them. Darius?
Yes, yes, Sharon, that's how we run it. So we are going to give you some minutes where you'll take us through your presentation. And once you're done with your presentation, we shall be able to come back to the Q&A. So right about now, I would like to let you take on the presentation. You can briefly tell us about yourself and what you're able and what you do so that people can know even as you go on to present. Over to you, Sharon.
All right, thank you so much, Darius. My name is Sharon. I've been doing investment advisory for the past 8 years. Sometimes I'm very fast, but let me try to really slow down and take my time not to be so quick in explaining these things. So I've taken 8 years doing investment advisory for investments in financial assets, mainly financial assets, not any other investments, but financial assets. And sometimes they are called traditional assets. I work with a company called Zeno, and I'm the sales manager at Zeno, though I'm very passionate about investments. Today, we are going to be looking at investing in financial assets using unit trusts. And I'm so happy and glad that the people on this call today actually know a bit of what financial assets are. So it gives me the confidence that I'm speaking to people that already know these things. So I'm just here to increase or add a little bit on what the knowledge you already have. And basically, let me just get to the unit trust fund is composed of investors that pool money together. And in here, it means that different individuals are going to get their investments pooled into one fund. And within that pooled fund, they will own units. So the units can be called shares, they can be called a portion of what they own in the fund. So then you to go and make investments on your own individually. When you invest in a unit trust fund, it means that you are putting money together with other investors that have the same goal, just like you do. And when this money is pooled together, you get economies of scale, whereby you're able to negotiate higher returns, you're able to get tax exemptions from the government, and you funds. So when someone says a unit trust, that's what should come to your mind. Now, when you invest today, for example, you decide that I want to start investing and I'm going to use unit trust as a vehicle. You will be issued units at the end of the day that you have invested, and those units will form your ownership or how much you own in the fund. And these units will depend at how much you have invested as an individual. Now, with unit trusts, the units you have will be affected by the daily performance. Daily performance, I mean, there will be interest accrued on a daily basis at different rates. And these rates will affect your investment depending on how much you have invested. For example, if the rate today was 10% that was earned in the funds, you will earn 10% of what you have invested. For example, the units will remain constant, but the performance keeps on changing and it keeps on affecting your units, which now will form what we call a current value. Should you want to invest in unit trusts, you're able to see what your current value is. Instead of how many these funds are having what they call a price per day. There's a price per day that is there, and that price will keep affecting your units, which now forms your current value at every given point. So in here, we've said unit trusts, these are pooled funds of different investors that pool their money together to invest with a particular strategy. So depending on which fund manager you choose to take on, the fund manager will determine what kind of strategy they will use when they're investing your funds. Now, when you invest in a unit trust, there's a structure that is followed. Now, this structure may not be followed for someone who is going directly, but should you decide to invest in a unit trust, this is the structure. There is a government body which regulates the investments that are being made using unit trusts. So when you're a few people, maybe 100 of you, and you're investing together, that doesn't make you a unit trust. You only become a unit trust if you're licensed and regulated by the Capital Markets Authority. And there are rules and regulations that you follow to invest investors' money. In this case, CMA plays the regulatory part. For every unit trust that is set up, there has to be a corporate trustee. And a corporate trustee in this case is a person that looks at the day-to-day running of the investments, the day-to-day management that the fund manager is doing. These are the people that will look and make sure that every investor's need is taken care of, and what the investors have requested the fund manager to do is what the fund manager is doing. Because now with the pooled fund, imagine your 14,000 customers, we are not able to get instructions from each one of you, but the corporate trustee in this case would be the person that will go around to ensure that all the 14,000 customers are taken care of and their investments are being managed well. The other person that is part of the structure is Stanbic Bank. In this case, this is the custodian. These are examples of partners that are partnering with Zeno. Other fund managers will have other partners, but I'm using the structure and the example of the Zeno service providers that are managing the client's money. So Stanbic Bank is the custodian, and this one's role is mainly to hold money or safekeeping of the assets. So when you invest today, it doesn't mean that, oh, because you've used the Zeno sponsored funds, it means that Zeno will take your money. No, Zeno doesn't touch your money. Your money is held in custody with Stanbic Bank. And Stanbic Bank will be the one to send the money to investments and make settlements should anyone be leaving the fund. And also money on a custodian account is off the bank's balance sheet. So should Stanbic go down or go bankrupt, no funds within the custodian account will go down with the bank because it's off Stanbic balance sheet. So you are sure that even when Stanbic does close, the money that is on a custodian account is safe. Stanbic gets this license from the central bank, and for you to be a custodian bank, you have to be in very good standing. Not every bank is able to do this. Very few banks actually have this license in Uganda. Now, besides Zeno being the fund manager who does the research, investment management, investment advisory, investment decisions, there is also an auditor who is Ernst & Young in this case, and Ernst & Young's role is to ensure that all returns that are declared are the actual ones. So with this structure, you're sure that your funds are safe, protected, and not only the fund manager is managing, but you're having more than 4 entities that are actually looking at your money and ensuring that they grow it for you. So should you decide to invest in unit trust funds, this is the structure. There's a regulator, there's a corporate trustee, there's a custodian, and there's an auditor at the end of it all. How do unit trusts work? So a unit trust fund is made up of units, like I had earlier said. You can actually look at them as how you'd have a share in a business. And these units prices keep fluctuating on a daily basis simply because every new money that is invested in a unit trust fund accrues interest on a daily basis. And unit trust funds like those of Zeno, other unit trust funds might have a different structure, but the structure that we have at Zeno is that your investments accrue interest daily and it's reinvested on a daily basis. So that then will form the fluctuation. You find that the performance keeps on changing because there's new money coming into the fund. Your investment is then pulled together with other people that are actually also investing and they have the same investment goals just like you are. And this money is collectively invested by the fund manager. And in this case, you take an example of Zeno as the fund manager that is going ahead to invest the pooled funds. So the value can be either gains or losses. With investments, we have assets that are either low risk or high risk. So depending on where you're invested, your value of your gains or losses of your underlying assets is calculated daily and the price of each unit is established at the end of every day. Meaning, should you reach a point T and you want to exit, you're able to take out what your current value is, and then that is paid out to you, and then those units are sold off to the fund, and other new people are joining, others are leaving. So depending on your time period that you want to invest for, that will form your performance. So in a nutshell, this is how unit trusts work. You own units, you pull funds together, a fund manager will go ahead and make these investments for you, and the value of your assets will either gain a profit or a loss, depending on which investments you are invested in. Under the financial assets, there are different assets that you can invest money in. We have the debted instruments, which is lending. We also have equity, which is ownership. For debt instruments, if you want to lend money under financial assets, you're able to invest in short-term lending instruments. In here, you can find fixed deposits, treasury bills, or call deposits. Fixed deposits, this is lending to banks short-term. Treasury bills is also lending to the government short-term. Call deposits, it's lending to banks short-term. Now with this, you're lending, you're not owning. So should you be a short-term investor who wants to invest for maybe less than 1 year, the short-term debt instruments make a lot of sense for you to invest in because they are highly liquid and you can easily get out your money when you need it. We also have long-term debt instruments, and here you can lend for 2 years and above, either through a treasury bond that's lending to government long-term. It could be a corporate bond lending to companies, or an infrastructure bond. Sometimes government has infrastructure developments like, let's say Karuma Dam, and they have a power project, but they need the public to come in and give it some money. They can borrow using infrastructure bonds. So bonds is long-term lending. On the other side, when you invest with Zeno, we are able to expose you to equities where you own shares of companies, either listed within Uganda, that's our domestic equity fund. Examples are Stanbic Bank, Umeme, DFCU, Cipla, to name but a few. Now, we only invest in companies that are listed on the stock exchange. We do not invest in private companies. We only invest in publicly owned companies. Regional equities, this is a fund that exposes you to companies that are listed on the Nairobi Stock Exchange, Dar es Salaam, and Kigali. In this case, for now, Zeno is invested in Nairobi, but we'll keep expanding to the other countries within East Africa. With equities, it's high risk, high return. So when you invest here, sometimes you can lose value. You can lose in the short term. Equities are for investors that are investing for a long period of time. And usually we encourage customers, if you're a short-term investor, less than 2 or 3 years, don't invest wholesomely in equities. You need to balance it out.
Sharon, we've lost you. Okay, I think Sharon's device is having an issue.
Hi, Darius. No, I had to mute. There was I'm at a restaurant, so they were singing, and I didn't want the noise to get to everybody on the call. I'm really sorry about that. So I had to mute and first wait for it to go down. So yeah, back to our presentation. So here, if you're to invest currently and you want to use unit trust funds, you find that all the Zeno funds are exempt from tax, from our money market fund, from our bond fund, from the domestic equities or regional equities. So the most tax efficient way to invest money within the financial assets, it's using unit trust funds. And in this case, Zeno gives you the opportunity to invest in 4 funds. The first 2, money market and bonds, are low risk, low return. You lend, you don't own anything. So for customers that say, I don't want to lose value, or my period of investment is short, I don't want to risk, we don't go ahead and invest in the other 2. So the other 2 are domestic equities and regional equities. And these 2 are high risk, high return because you own shares of companies listed, and they're usually volatile. Someone would say, okay, how long has Zeno been in business? We're making our 4th year in October. And it's been a very humbling journey. The 4 funds we have, 2018, 2019, 2020, this is our performance. The Zeno Money Market Fund averaged 11.7 in 2018, 11.8% in 2019. 2020, it averaged 12.5. And all these rates are net returns. They are returns that are net to the customer after Zeno's fees. The Zeno Uganda Bond Fund performed 15.7% in 2018, 2019, 15.5%, 2020, 15.3%. Now, if you notice that the first 2 funds are having green and they don't have red at all or yellow, because with these ones you're lending, the risk is low. So you're sure that at least when you invest your money, chances are that the reds are really, really minimal. They shouldn't even happen. They can happen, but the possibility is very small. The Zeno Uganda Domestic Equities Fund in 2018 performed 15.6%. In 2019, it performed negative 13.2%. In 2020, it is at 0.5%. The Zeno Regional Equity Fund in 2018, it performed negative 7.5%. In 2019, it performed positive 39.1%. 2020, its performance is at about negative 18.7. So with the last 2 funds, you find that you can actually make a loss. And we typically tell our customers, invest in equities if you're long-term. Don't invest in equities if you're looking at a short-term investment period. If someone out there is asking, how am I able to join Zeno if I wanted to start investing using unit trusts on a tax exempt? You're able to go to our website, which is www.myzeno.com. You select a goal because Zeno is goal-based. We believe that people invest because of goals. You select a goal, set up an account, deposit money, and then monitor the performance of your goal. And we currently also have an application where you're able to actually go and monitor your performance. For those that do not have an email or smartphone, you're also able to set up your account via MTN. You just dial *165 *4 *4 hash. The merchant code is XENO. Zeno, accept, you select a go. Our minimum investment is 10,000 shillings. And then you're able to start tracking your goals and seeing how your money keeps growing. Should you need this money back, you're able to initiate a withdraw anytime. We typically encourage our customers to at least invest for a month before they take out their money. How to make deposits? Should you set up an account? There are 3 ways. You can either use agency banking, and that's Stanbic agents. You can use mobile money, or you can do a bank transfer from whichever bank you're in to the Zeno custodian account in Stanbic. So create a personal plan today in the 3 easy steps. You can either set up via the website, myzeno.com, or you could actually go onto your MTN mobile money menu and just follow the steps. Thank you so much for listening. I would like to take questions. Or Darius, can you kindly go ahead and go through the Q&A? I like to have a more interactive session than just talking too much. Over to you, Darius.
Great. Thank you very much, Sharon, for that brief yet elaborate presentation. And I believe now we have more minutes for the people to interact. So please, if you have a question that you would like to pass on and understand about unit trust investments, specifically from Zeno, you can kindly post your question in the chat room. I'm going to be picking questions from the chat room kindly. So Sharon, the first question is from Bright and Hura. Is asking, what's the difference between government securities, that is bonds and bills, unit trusts, and fixed deposits in banks, which gives a higher return at the end of the day, assuming I invested in the same? And then Rita Namudu is asking, what is the interest rate at investment? While Paul is asking, are there limitations? How much I can invest? What is your current interest rate? Can I get my money back anytime if I want it? That is our principle. So if you can respond to those, and then I'll be coming back to them.
Okay, Darius, I'll try to answer those very interesting questions. Current performance now depends on whether you are investing in low risk money market bonds. That's easier for us to give a rate. What's the current rate right now? Average is about 12% for our conservative investors, net after fees. But depending on which fund you're invested in, for the equities, those ones are volatile. Yes, you can take your money when you need it. The beauty with unit trusts is that they're designed in a way that customers can come in and out whenever they want to. It takes 2 to 3 business days for us to pay out that money again. Yes, someone is, I think Jotham is from investment where the returns offered cash deposit based on, yeah, so it is fluctuating. The rates are fluctuating. They are not fixed, because when you give me money today, we are going to go ahead and invest it. And the interest that accrues today, tomorrow will be reinvested at a different rate. And the fact that you're investing in a fund, it means that this fund is receiving new money on a daily basis and it has to invest it. So our rates are floating. So should you want to see what the difference is between you going directly and you investing through us, is that the rates in a unit trust fund fluctuate, they're not constant.
Okay. I'm kindly going to request that we all mute ourselves if we are not speaking. Okay. So, all right. So Sharon, someone was asking, what is the difference? What is the difference between government securities and which one gives a higher interest? Government securities, unit trust, and fixed deposits in banks, and which one gives a higher interest rate?
Okay, so about interest rates, it depends. at that time. Maybe what we could do here is to ask ourselves, what's the current rate in the bank? If you went to ask for a rate for 10 million, how much is the bank willing to give you? It could be a 7 or 8%. But like I said here, these ones are tax exempted. When you go directly, you are taxed. There's a withholding charge for every investment done through the bank. But should you invest through the unit trust funds, they are tax exempt. You don't pay tax at all. So our current prevailing rates on investments that are conservative is averaging at 12%. Should you invest today in our money market and bonds, because we balance the two, you will find that you are earning 12%. Should you go directly, your rate will even be less than 10%. So we are able to give you higher returns. So sorry, guys. So sorry. That was another one, but I'm deeply sorry about it. So I was saying that the returns are basically higher because with us, you are able to get your investments reinvested. Should you invest today, your interest earned yesterday is able to be reinvested. There's a tax exemption. And then there's diversification than you to just invest in a fixed deposit alone. Here you're getting exposed to bonds, you're getting exposed to treasury bills, not just a fixed deposit. So these are some of the advantages. And then should you want to invest in equities on your own, you would find that you need to again hire a broker who's going to be able to make these investments for you. But when you invest through a fund manager that is licensed and regulated, you get exposure to both. You have a diversified portfolio. You have treasury bills, you have bonds, you have shares, which helps you now to actually balance out your risk and also to earn higher yields and also getting exposure to other investments besides just a mere fixed deposit or a treasury bond. What determines the volatility, which results into, so should you invest in these assets, these two assets, the domestic equities and regional equities, because you're owning shares of these companies, when they perform well, you earn. But when they fail to perform because of different scenarios that could prevail, it could be due to COVID, these companies are not selling, or it could be anything that could affect their performance. So there you're owning a piece of that company. So when they fail to perform well, that will lead to a volatility and find that you're losing value in the short term. But should you give it a long time of waiting and being patient, equities actually usually outperform the low risk investments. Okay. Is it possible to choose which investments? Yeah, people who are able to choose the investments are already existing customers. So if you're new, you may not be able to choose. When you're new, you would find that they'll give you a conservative investment, but once you talk to an advisor, you're able to actually adjust, or even within your account, you're able to personalize and increase the risk or reduce it. Clubs can invest. We have an execution. We have an execution that gives clubs a view where all members are able to actually view and see how their money is performing. And for clubs, if you're registered, yes, we will require your registration certificates. Okay, someone wants to get a projection. So should you actually open a Zeno account, you're able to run all these scenarios. how much you've invested and how it will look like. So we usually give a best case, worst case scenario, or most likely scenario. And in this case, for the 10 million shillings, currently now we are, for the conservative investors, they're earning about 12%. And that's the most likely. Worst case is about a 9%. Best case would be maybe a 13%, but these rates keep changing. They're not static. They keep changing because we are investing on a daily basis. So Zeno has several portfolios. Can an individual invest in more than one? Yes, you can. You can even invest in all the 4 if you want to. So depending on what your target and goals are, we are able to help you diversify and invest in all the 4. There's domestic equities, there's regional equities, that's for the high risk, high return. And then we have the low risk ones, which is bonds and money markets. Darius, I'm trying to run through. The 12% is annualized and paid out on a daily basis. It's annualized, paid out on a daily basis. I think someone was complaining about being off. I kept on muting because I sat at a restaurant and there's been a bit of noise. So every time the noise was too much, I would mute and wait for the noise to come down. So sorry about that. How sincere are unit trusts to their clients in declaring daily performance? They are very, very transparent. The structure alone makes us be so accountable to all our investors. So they're very transparent. That's why on a daily basis, you know what your stand is. What is the least amount that I can begin with? Minimum investment is 10,000. Should you have 10K, you can actually start investing today. Is Zeno not applicable to Airtel users? So with Airtel, we are not able to set up accounts using Airtel, but should you be on the platform and you want to invest using Airtel, you can actually initiate a deposit. So Airtel, you can only deposit using the platform, but you can't create an account. But for MTN, you can actually create an account. Yes, so for those who want to invite me for Zoom call presentations, we do this free of charge. We don't charge money. Our advice is free. Yeah, so should you have groups of people that want to listen in to learn about investments using unit trust funds, I'm always available. What advice do you give me on how to invest? Because I already have my account with Zeno, but I don't earn. So people who are not earning, probably you're very new in the fund, because the beginning is usually a bit tough. People want to have a high pace of returns, or also you could find that maybe you're having a lot of equities. So for Rehma, kindly get in touch with me. I'm going to drop my details. You get in touch with me so we can see how best to adjust your allocation, to optimize it, to give you a good performance that will make you a proud customer. So it could be that you've just begun and probably the portfolios haven't picked up very well, or it could be that you're invested in equities and you need a bit of time to give your investments some good time to actually start giving you some returns. But one of those could be the issue. So get in touch with me. I've just typed my details in the chat room, my email, phone number. Okay, the website is not correct. Let me retype the website again, sorry. myzena.com. Darius, any other questions?
Yes, Sharon. So we have a question. Someone is asking the age limit. Can my 18-year-old son open an account? And someone also was asking about minors.
So for minors, provided your child is 14 years and they have a passport, they can own an investment account with us. They have a passport, that's their ID. If they don't have any government issued ID like a passport or national ID, then they can use their parents to open the account and they become beneficiaries. We typically encourage parents to actually let their children manage their investment accounts by sitting down with them, encouraging them to invest, and they monitor to see how their money grows, because that's the only way you're going to really teach them the good habits of investments when they're still young. I opened one for my 8-year-old, and every time she keeps asking me, how much money do I have on my Zena account? So when she checks and finds that she has her 50,000, she keeps telling me, how can I increase? So every time she gets some work done and she has money, she says, Mommy, Can I invest my 10,000 on my Zeno account? So she has learned that actually there is saving and investment. So we can teach them when they are young. If they are really minors and they don't have passports, any government issued ID they don't have, then the mother can open and they become beneficiaries, and they can personalize the goal and name it. They name it that child. So for example, my last born, I have a goal and it's named in her name, so I know this is hers. When she grows, then she can maybe open a Zeno account, and then I'll just transfer that to her account later. So that's what typically happens for minors. But any child who is 14 years and above and they have a government issued ID, they can own an investment account with us. The difference between money markets and bonds, can I take this one before?
Yes,
before Darius? So money markets is short term, any investment less than 1 year. Fixed deposits, treasury bills, call deposits. Short-term investments, short-term lending is money markets. Long-term lending, those are bonds. So we have short-term and long-term. Short-term means you're investing for less than 1 year. Long-term means 2 years and above. So that's what it means. Yeah. Over to you, Darius.
All right. Thank you, Sharon. So Rose is seeking for clarification. I thought you deal in group investment, but I see members talking about individual accounts. Could you clarify to her?
So Zeno deals with individuals, circles, investment clubs, institutions, whichever way. It doesn't have to be a group. Whether you're a group or an individual or a family, registered, not registered, informal, not informal, provided you're an individual and you can be identified by an ID, you have a physical address, and you can prove your income sources, Zeno will take you up as a customer.
All right. I think what confused her was when you said that money is pulled from different investors. But that doesn't mean, Rose, that you as an individual cannot invest with Zeno. Actually, you are one of the individuals from which this money is pulled from. And then someone is asking, can they invest with you and also invest with other fund managers like Britam and UAP?
So yes, when you see the market has different licensed fund managers. UAP Financial Services is one of them. Britam also asset management, not the insurance, but asset management does the same thing. They have unit trust funds, but there is a difference in the execution and investment philosophy. Our strategy as Zeno is we take a goal-based approach. We look at your goals, we help you plan, we help you invest and reach your targets. Then we also look at tailor making. We don't sell rates. For us, we don't give a rates as a point or at a point of sale. We will give you the funds and say this is how these funds have been performing in the past. And then the customer, depending on his constraints, his investment goal, investment universe, they decide where to invest, and the client has a say. And our past performance also maybe would be something that you use to compare with the rest. How are the best performing versus Zeno? Zeno is Ugandan founded, and then the rest are from somewhere in the world, but also incorporated in Uganda. We take goal-based investing. We've automated the entire process of investment. So a customer is able to set up an account online without even interfacing with us. We are able to report. We are able to send back this money. Customers can choose to either be paid on mobile money or to be sent money to be sent to the bank. I think we are the only fund managers that are having a USSD. USSDs where you get onto your capability without internet, *165 mobile money menu, you set up an account. I think we are the first ones to do that here. So it's those small other details that a customer would say, you know what, I'll choose Zeno because I have a say on the mix of assets where my money is invested. I can choose to be risky. I can choose to be low risk. I can adjust every 6 months, personalize my goal. I have tools to plan. So those are the small things that make us different, but we all have the same license, which is from CMA. So it's now into those little other detail, performance, accountability. How often do I get my statement? How how easy is it for me to access Zeno? We have an application, we have a platform, myzeno.com. You can access us on MTN Mobile Money. So those other small things. For groups, each individual can be set up to track and see how the group's money is being invested and the returns. So it is in those small details that maybe Zeno would have an edge on the rest, depending on what they're serving or giving to their customers. Thank you.
All right. So Sharon, there is a question here from Kusemera Patrick, and is asking what is the minimum period of time to withdraw your money? And then you will answer that alongside these questions. Okay, I think William was making, was referring to when you were explaining about your kids. I think William, even the father can invest on behalf of their kids. And then Rollins was asking, where does your ATR get income to invest? You can briefly tell us about that. And what happens with people's money when Zeno goes out of business? You can give them assurance also along that line.
Darius, okay. Let me see if I can cope up with all the questions. I didn't note. So there's one about the ATR. How does she get to track? Was that the question?
Yes. Where does she get the money from?
From me. Oh, my children earn money when they do housework at home. My children do housework and they get paid. They go to the garden instead of me getting someone to come and weed. My daughter actually gets a hoe. She goes and does a very big portion of weeding. Yeah, she does quite a lot of work. So that means to bring in someone, she does housework, she waters the plants, and she gets her wage for doing that work. And then there, she's able to invest. So we've made it, and she knows I earn every time I do work, or every time I engage into housework or the gardening work, she has to earn money. So she makes money. The other question was what?
The other question was what happens with people's money?
In case Zeno goes out, yeah. This is something I took care of early in the presentation when I was starting. The structure protects investors. So should you invest your money today, the structure will protect you. How? Zeno does not hold your money at any one point. We don't take in your money. We don't hold your money on our balance sheet or on our account. Money is held in custody with Stanbic Bank. So the safety you have that should anything go wrong with Zeno, KCB Bank, the regulator, CMA, and Stanbic Bank will pay out all the investors that have invested in the fund, or a new fund manager will be appointed and your investments will be done by that new fund manager. So the structure actually segregates the roles to protect the investor who is putting in money not to lose. So for anybody who is worried that, oh, what happens when Zeno closes? Zeno will close without going with customers' money. The money will be held in custody, and that structure actually protects investors. So that's the beauty here, is that even Stanbic, if Stanbic closed today, the money on a custodian account is off the balance sheet of the bank. So you're sure that your money will be safe.
Okay, thank you, Sharon. The other question is, and came from Patrick, what is the minimum period of time to withdraw your money?
Yes, I remembered that one actually. Minimum investment period, usually with unit trusts, there is no minimum. We recommend a month minimum, but should a customer give us money and they wake up 2 weeks later, they need their money back, they can take it. However, if a customer gave us money today and they came in 4 days in to get the money, they might make a loss, because when we invest in bonds in Kenya, because our bond fund is diversified both for Ugandan bonds and also Kenyan bonds. So while we are investing in Kenyan bonds, we pay a brokerage fee because the bonds in Kenya are listed on the stock exchange. So your first 3 days or 4 days in the fund, you're in negatives, you earn a negative gain. So should you come back at that same point before you break even, you'll take less than what you invested. So the best thing is at least leave your money in for a month, though we've had customers that get emergencies. They put in money, but then they get need for money after 3 weeks. We don't typically want money for a month. If you need this money in a month, keep it on a bank account. Give us money that you need over and above a month. That would be a better way of putting your money to work best with Zeno. Any other questions, Darius?
All right, thank you very much, Sharon. So there's this question from Robbie Mhumza, and is asking, if I'm retired and I'm not earning a regular income, can I invest my lump sum retirement benefits in unit trusts and earn interest, which I can withdraw on a monthly basis, while the remainder keeps earning me compound interest?
So for people in retirement, we have a goal, and this is the income drawdown goal. This goal targets people that have a lump sum or people that are in retirement that would like to invest their lump sum. And after a period of time, they can either give us standing instructions to pay out on a monthly basis, quarterly basis, or withdraw when they need their money back. What do I mean? A person X may say that I have made my 200 million. I would like this 200 million to earn me, to replace my salary. So Zeno then goes ahead and pays out on a monthly basis. And this money is paid to the customer's account. Another customer would say, invest for me my lump sum. Whenever I have need, I'll initiate a withdraw and pay. Another customer would say, okay, if my interest monthly is 2 million, pay out 1 million and let the other 1 million be reinvested. So depending on the customers, we are able to actually pay out. So lump sums are accepted, and our income drawdown goal works for people who have reached retirement and they would like to earn a living to replace their monthly paycheck that they were receiving.
Thank you very much, Sharon. I think we are coming to the evening of our presentation. There's someone here who needs a clarification on the interest rates. I know when you presented the earnings over 3 years, I think Rose got confused a bit, but I'll let you respond to it. She's asking, these percentages shown in 3 years, are they earned consequently, as in if you started with 3M and intend to invest for 3 years, does it earn interest per year? Maybe you can help to clarify the table that you showed that had interest. I guess it's what she's referring to.
Okay. So should you join Zeno today? Your interest is going to start accruing tomorrow. When we receive money today, your interest will start accruing tomorrow. And our current rate is at about 12% for conservative investors. The table I shared earlier was showing you investors that had invested in Zeno 2018, 19, 2020 from 1st January to 31st of December. If you came in between the year, your rate could be different because you weren't in the fund. Because for us, we take a calendar year as our investment year. So for you to earn the entire 11.7, maybe for the money market or the 15% for the bond fund in 2018 or 2019, you should have been in the fund from 1st January to 31st December. If you came in between, your rate would be maybe half of the 15%, depending on the prevailing rates. How unit trusts work? When you join today, you start earning today. The rates are per annum, but paid out on a daily basis. So we'll divide that rate by the number of days in the year to give you today's 12%. Then the next day, if the rates drop or go higher, we do the same thing and we repeat that over and over again. And that's how we are able to actually credit your interest onto your account on a daily basis, because we evaluate the assets daily. And the rates I shared are net after fees. Net after fees. And the 12% I am seeing that is being quoted. So Yoram is asking me, is the 12% net? So every rate we declare is net, but it is also dependent on which assets you're investing in. So what I shared as an average of 12 is for customer investing in money market and bonds only without equities, because with equities, then that percentage can be much, much more lower or even in negatives. So depending where the 12% average was for money markets and bonds.
Okay, thank you very much, Sharon. I see we are still getting more. We are still getting more questions coming in. George is asking, and I'm going to take on 3 more questions and we conclude the session. So George is asking, if I have a plan of building in a year's time, but it will cost me 50 million, how much can I be depositing monthly? Well, I think what she said is that the earnings differ depending on the performance and depending on where you choose to invest. And then Julius is asking, Sharon, can you get a figure, say 10 million, and say one invoice for 1 year, what he earns in 1 year in cash terms? Not many of us understand to interpret percentages.
Okay, so this is all around performance. I want to do something very, something that is more practical. I'm going to share my screen again. When you're on the Zeno platform, we have what we call the Zeno planner. It gives you indications on how your money is going to grow. So someone is saying how much? 50 million. Okay, we use 10 million. Are they giving me 10 million and walking away, or 10 million and staying?
Okay. Let's use this question. This person says their target is 50 million. So how much can they invest
okay.
on a monthly basis?
Now, the planner works in a way that it starts with how much you can invest monthly to work out your target. Now, this one has their target in mind. Okay, okay. For how long? How many years?
1 year. And once you know how much you can employ each month.
Wow. Wow. Okay, so 50 million in 1 year, let's say, let's try this one and see if it will get us there. Okay, so this is a lot. I was just trying to run with 6 million per month. So the planner works in a way that it asks you how much you can afford monthly. Oh, no. Not 66 million. Okay, still high. Let me go for 5. So you see what I'm doing? I'm using the planner to run different scenarios. Okay, this is still high. Okay. 4 million per month. And monthly putting in 4. Okay, this is much more closer. So this person now needs to be saving at least 4 million shillings every month. So they start with 4 million and then they keep reinvesting 4 million monthly. Total invested at the end of the year would be 52 million. That's what the person will have invested for that period of time. Worst case scenario would be a 54.3 million shillings. Most likely would be 55 million. Best case would be a 56 million shillings. So the planner is able to help you run scenarios to guide you on what to do. And with this one, I've taken a diversified portfolio that is having a bit of equities. Now, should the customer say, I don't want equities, you'll see that these numbers are going to actually change. Now, the one that was 56 is now 55. So the lower the risk, the lower the return. So in this case, this person should be investing 4 million per month for the next 12 months to hit their target of 50 million.
Okay. Thank you very much, Sharon. I think you've responded very well. Could you try the scenario for the person that was asking about 10 million? Maybe let's put 10 million and relax. Okay, and here we are talking about low risk.
Oh dear, sorry, I was talking to myself. So here, it's 10 million. So 10 million shillings is what the person has invested and they don't invest again. Worst case is 11, and this is low risk. 11 million, most likely 11.2, best case 11.5. But like I said, these rates keep changing. So yes, we could perform better than the best case in this case, or slightly lower than the best case. So the platform is able to actually help you simulate and try out the different numbers and the projections. But this is for a conservative investor who invests 20% in money markets and 80% is invested in bonds.
Okay, so Sharon, someone is asking, Bosco, this is after 1 year. The 10 million was being simulated for 1 year. And then Sharon, you've been referring to a conservative investor and someone kept asking, you could help for someone on this call who doesn't know to understand what it means to have a conservative investor.
So conservative means you don't want risk at all. You only in the green side, which is low risk. You're lending, you're not owning anything. Now, for those that are moderate, then those are the ones that can take in a bit of risk. So moderate means you don't want to take a lot of risk, but some risk should be there because risks give higher yields. They'll definitely give you higher yields in the long term. So the red here is representing the regional equities. The yellow represents domestic equities. So yeah, depending on your risk tolerance, Zeno is able to diversify for you, invest for you. And over the period, people invested in equities earn more than people that invest in the secure, low, conservative ones like bonds and money markets. But you should be a long-term investor. Should you be a short-term investor? Equities are not for you because if you're investing for 3 months and you want risk, you can come back when your money is in negatives. But should you take 5 years, 10 years of an investment period, equities make a lot of sense because they will make you rich. Money markets and bonds will preserve your money. You'll be there beating inflation, close to inflation, but you never really become wealthy when you're investing in money markets and bonds, though they help a person who is either in their retirement age, they don't want to risk their money, it's their last paycheck. But for young people like Darius and myself, equities should be forming part of our portfolios because they will grow your money in the long term. They give growth, though they are volatile. And every time you see them dropping to negatives, invest more because they're cheaper then. And when you see them rising and performing slightly better, you can benefit and take out some of your benefits. But Ugandans, when equities drop, they all rush to withdraw. They're like, I'm losing money. We see it in Zeno. Equity customers are very impatient customers unless they are really educated. But for starters that come in and they see negatives, they want to run out of the fund. They're like, no, I'm losing money. Not even thinking that actually this time it is becoming cheaper. I'll earn more units when I invest when the funds are in a negative. Over to you, Darius.
Okay, that's a very good one. Thank you very much, Sharon. Okay, maybe I'll take this one, last one from Joanne, and then we close. Can you swap from long term to short term?
So with Zeno, every 6 months, you are allowed to adjust. You're allowed to adjust your portfolio. You can say, okay, my investment period is. I'm even one of the people that said I'll have a goal of 10 years. In 3 years down the road, I got an investment. It was an investment in a property I was going to buy. So I said, don't wait for 10 years. Let me withdraw and take advantage of this opportunity. So it doesn't mean that when you say I'm investing for 8 years, it has to be 8. No, it can be 8, but should you get a better investment or you get an emergency or need for money, you can liquidate and invest elsewhere. So you can always adjust even a short-term goal. You can say I'm investing for 6 months, but you don't need this money. You leave it in until when you need it. So we typically tell our customers, the goals just help you stay on course. But the reality is different. You can keep money for a house and your child gets sick. will you say that this house, this money is for the house I want to treat my child? Or you could say this is for medical emergencies, but the emergency doesn't happen, but you get an investment opportunity. So it can be changed. The only thing is that maybe if she's meaning, how about if she's so high risk and she wants to reduce to low risk? It's also possible. All this is possible. You can adjust and change your risk appetite or the the investment period that you want to invest for.
Thank you very much, Sharon, for having agreed that we post you and for your hunger for knowledge about financial literacy. If today was your first time joining us, please be sure to join our WhatsApp community so that you always get information about financial literacy, where we talk about things to do with savings, investment, growing your income, planning for retirement, and so much more. It has been a pleasure. It has been a pleasure hearing from Sharon, because she's very experienced in this thing. And one thing I like about her is that she's very generous with her knowledge. And indeed, she promised that if you have a group or if you would like to invite her to your workplace, she's very glad to come through and be able to make this presentation. Thank you very much, Sharon, for what you're doing, not just to us, but to the entire nation, educating people about unit trusts. I did not know about unit trusts until I started investing in them. And I started wondering why I was saving my money in the bank and it was just there getting less than a 3% at the end of the year. So would you please take advantage of Zeno? You can get in touch with me, you can get in touch with Sharon, and we can always share more if you'd like to have more knowledge. For everyone who was part of this presentation, thank you very much. We will be sharing the recording on YouTube. I shared the recording on YouTube. Once again, I wish you a lovely week ahead. See you next week when we shall be having yet another presenter. I thank you very much.
Thank you.
Thank you, Sharon. Thank you, Darius. Bye.
Thank you, Lord.
Thank you all. Thank you, Darius.